Raoul Pal just issued a major warning to all Bitcoin and crypto investors. He will be selling crypto before the end of 2025. And the shocking thing? We completely agree with his approach. Despite Raoul believing this current crypto cycle will be different, being that we will get an elongated 5-year cycle extending deep into 2026, he will still be selling a meaningful chunk of his crypto holdings by the end of this year. Surprisingly, his rationale aligns with a prudent approach many should consider. Despite all signs pointing to a 5-year crypto cycle stretching deep into 2026, Raoul urges everyone to balance ambition with risk and to take profits along the way. In this video, we will cover Raoul Pal's current thinking based on his recent tweets, his deep macro and crypto analytics, and his unique banana zone framework that explains market phases in this cycle. We'll walk through his key messages, dissect why he sees a longer cycle, and what that means for crypto investors as we approach 2026. And before diving in, only a small percentage of viewers are actually subscribed to the channel. If this content helps navigate the months ahead, hit the subscribe button. It's free, you can always change your mind later, and supports the channel immensely. Now, let's jump in. First, let's look at Raoul's latest tweet in which he breaks down why he'll be selling into year end. I think it needs explaining that although I see an elongated cycle, it doesn't mean my analysis is right. The breadth and depth of the macro crypto analytics framework I've added since 2021 is massive, and I'm happy with the probabilities currently, but things can change. We have done tremendous amounts of work on this, all at the nexus of crypto and macro in the Everything Code. It comprised of over 4,000 charts. However, I am not a guru. We all need to take lifestyle chips off the table to secure our own future. I can't dictate that. In Reek Vision 2, we will do our best to help as many people as possible, but we are not and will not be perfect. This is your choice alone, not mine. Only you can actually protect your own future and thus limit regret if the market reverses or even it explodes higher. I'm guessing I'll take 25% to 30% off into year end, but I don't know yet. It's based on my own circumstances, not yours, and it's based on my P&L and not yours. So there's Raoul sending a clear signal that he plans to secure some profits while the market stands strong. Taking 25 to 30% off the table is a wise and pragmatic move many successful investors have adopted over the years. After all, no one has ever gone broke by locking in gains. Considering Bitcoin and Ethereum are currently near or at all-time highs, if waiting to take some lifestyle chips off the table is on your radar, this is arguably an excellent window to do so. Locking in profits at peak or near peak prices can safeguard capital against unforeseen downturns while keeping exposure for longer-term upside. And while we agree that all signs are pointing to a 5-year cycle, nobody knows the future. This cycle may play out like all the previous cycles with a peak in Q4 of this year. Now, Raoul goes on, also don't forget that your risk profile is different to mine. I can afford to take outrageously concentrated risks like having 80% of my liquid stack in SUI. But based on my work, I think SUI, it outperforms most others' majors. My job for myself is to maximize profits with best risk-adjusted returns. For most, just buy Bitcoin, Ethereum, and Solana. The banana zone won't fix your shitty asset allocation. If you have had a decent portfolio, you will already be up 5 times to 10 times from the low. Here, Raoul reminds everyone that his approach is highly personalized and tailored to his own personal risk tolerance and confidence in specific assets like SUI. He openly acknowledges that what works for him is not going to work for everyone else. His advice for most investors is refreshingly simple and grounded. Focus on the core heavy hitters, Bitcoin, Ethereum, and Solana, and avoid chasing speculative tokens. Always remember, poorly constructed portfolios won't magically be saved by market cycles. If someone has held a balanced portfolio focusing on major crypto assets, chances are they're already sitting on 5 to 10 times gains since the cycle low. This is an important reminder to focus on quality and discipline rather than hype and impulsive trades. Finally, Raoul gives a final warning to all crypto investors. If you are newer, don't chase gains. Time in the market is vital. You should make money this cycle, but here is more to play for over time. You have 5 years or so to unfuck your future. Please don't fuck it up. This will be my pinned tweet so you can refer to it. Just let it all play out and take profits on the way. Good luck. My work suggests the next 6 to 9 months can change all our lives, but don't bet on it exclusively. This tweet embodies a rare mixture of conviction and humility. Raoul confidently maps a broad probabilistic framework that the best of the crypto market is yet to come, but reminds viewers that no one can predict markets perfectly. His emphasis on lifestyle chips or taking profits is a risk management principle that many overlook in pursuit of outsized returns. Now, let's dive into the facts. Why are we so sure we are going to get a 5-year cycle? Raoul Pal sees us barreling toward the final months of 2025 with a mix of caution and anticipation. The macro landscape is shifting, liquidity, macro sentiment, and investor participation are all key drivers right now. Recently, Raoul noted that liquidity had been pulled out of markets due to massive treasury bond issuance, which was draining cash from the system. But that has now changed.
You see, what has happened in the meantime is the Treasury General Account, that is the Fed, the Treasury, have been issuing bonds to top up their general account, which is taking cash out of the system. So they've withdrawn about 500 billion since July the 16th. That has hit risk assets somewhat. And of all the risk assets, the one that's most susceptible to liquidity is crypto. So crypto got that, which has been this choppy, it went up, alts have been outperforming, then they came back down again, and it's been just a bit sloppy. Nothing more than that. There's been nothing really adverse going on, just a bit sloppy, top of the range for ETH, top of the range for Sol, tried to break out, came back down, fine. But generally it's because they're sloppy because liquidity has been taken out very fast. The liquidity withdrawal stops about here. We're at the point where we don't need to withdraw any more liquidity and the Treasury General Account is topped up. Okay, so that negative thing has gone probably today, tomorrow, this week, next week, whatever. It's gone. And we start to see that liquidity will play catch up. Does it catch up to this chart? I don't know, but it always has done in the past.
This insight from Raoul explains why recent price movements in crypto have been so volatile and unpredictable. During liquidity droughts, the market tends to weaken, but that phase has now ended. As the cash flow environment stabilizes, Raoul expects markets, especially crypto, to resume their upward progression. Next, here's why Raoul is so certain we are going to get a 5-year crypto cycle. Raoul's central thesis hinges on macroeconomic shifts that have extended the typical crypto cycle. Traditionally, these cycles have lasted around 4 years, aligned with debt maturities and the typical business cycle. But since 2021, macro drivers have fundamentally changed.
Why do we have an elongated business cycle that looks like virtually no other real other time? It's because, and I only just found this out redoing the work on the Everything Code recently, is that in 2021-22, they actually extended the maturity of the debt from 4 years to 5 years. So that extension of the maturity of debt has pushed out the business cycle a year. The 4-year cycle this time around is a 5-year cycle. We don't know what the next one will be until we see where they all end up getting refinanced, whether it comes back to 4 because they managed to get some stuff at the long end, or whether they shorten it because everything's in the short end. We don't know yet. But this one is a 5-year cycle. And this is what it looks like. A 5.4-year sine curve. 5.4 years is the exact average weighted maturity of the debt. And it tells us the ISM should peak by 2026. We think liquidity probably peaks before that, as the rate of change of ISM changes and the rate of change of liquidity changes. Our best guess remains well into 2026, probably Q2. We'll have more information on that in due course. Part of that is driven by our financial conditions index. This leads the ISM by 9 months. It says in 9 months' time, we're in September, so this is June, the ISM will be 56.3. That's still not racy. At the tops of the cycle, it actually gets usually a bit higher than that. It usually gets to sort of 58, maybe 60. Regardless of where we get to, in 9 months' time, the ISM will be that. That's June of next year. That tells you the cycle, probabilistically speaking, will end up going up until Q2 next year.
Raoul emphasizes that this isn't just guesswork, it's rooted in extensive macro analysis, combining debt structures, liquidity flows, and economic indicators. The result, the crypto market, which is heavily driven by macro liquidity and investor sentiment, will likely stretch into the second quarter of 2026 before peaking. Raoul's banana zone framework provides a helpful map for understanding this cycle and how it will probabilistically play out. It divides the market into phases, from correction to acceleration, often accompanied by intense volatility and investor impatience.
We are in an elongated cycle. This box will probably be significantly longer than a previous box. We said phase one of the banana zone, phase one correction. We're still in the early stages of phase two. Phase two is going to take us up here. Maybe that's the 200,000. Maybe it's further. I don't know. We will then have a correction. We saw that in that chart previously. Look, think of this. Oh, look. Could that be phase one correction? Ooh, and then we go to phase two correction. Oh, and then phase three correction to the top. Oh, maybe it is. Maybe it could be. That's what we're talking about. So all the people are like, when banana, it's the same fucking banana. It's going to be a bigger banana. And I know you like big bananas.
Raoul stresses patience during these high importance periods. The market may see sharp declines, but those are just part of a longer term pattern. The next wave could push crypto prices to much higher highs in 2026, possibly surpassing the previous all-time records. The cycle almost resembles a stretched out marathon rather than a sprint, and all signs are pointing to that. At the core of Raoul's extended cycle analysis is the macro liquidity environment. His decades of macro research underscore a simple truth. Around 90% of Bitcoin's price action can be traced directly to liquidity.
Because this is the trend. You just need to understand liquidity, and then you understand the directionality. And if you're caring about the next 3 weeks, the next day, the next month, you are doing this wrong. You're trying to follow people on Twitter who are trading and not investing, and they won't make the money. Honestly, it sounds like they do. They show their wallets. I made 100x in this trade. Most of those people don't make any fucking money whatsoever.
Raoul points out that the current liquidity pullback was temporary, driven by bond issuance, not systemic weakness. Now, with liquidity injections expected and a stabilization of cash flows, markets will likely respond with renewed vigor. He emphasizes ignore the short-term wiggles. The macro trend is liquidity up, prices up, it's that simple. Raoul strongly advocates understanding the macro cycle's extension. Since 2021, central banks and governments extended debt maturities, pushing the cycle out by roughly a year. He draws comparisons with previous cycles, like the 2016-2017 cycle, and highlights that recent patterns have followed the same broad waves, just lasting longer. Based on the correlation with liquidity and macro indicators, he confidently states,
we kind of see that 2026 is more 2017, and that somewhere contextually there's this extra year, and it feels like it's all to play for. And it's very remarkably similar pattern. Again, we're not looking for this to repeat perfectly. We're giving contextualization that if we go longer, the price is going to go higher than people expect. That's a function of that log regression channel I often show you. And I think that is the most likely outcome. And there'll be somebody on X now saying, yeah, you're going to blow everybody up. We're going to try and do our best. That's all we can do. And you guys have to manage your own risk. We're just trying to do the best we can to help you navigate this. And by our probabilistic standards, we think that it goes well into 2026. And you'll probably have, this says like, towards the end of this year, you'd have some sort of correction. Well, can you imagine how many people are going to, if we got a little parabol over 200,000, how many people are going to say it's the top? I'd say 70% of FinTwit or crypto Twitter. It'll correct. And then if we're right, then it takes off again. Okay, that's unexpected. And this is what's been in my head for a while, is we're going to trap everybody who has PTSD from the last cycle, and everybody who's the 4-year crypto cycle is sacrosanct. That's my guess. I know there's going to be a ton of people arguing about this. That's my best guess.
His analysis suggests that patience is key. Patience with cycles, patience with corrections, and discipline with profit taking. Raoul warns against overconfidence. While he leans towards a cycle that peaks around mid-2026, no one, no matter how deep their analysis, can predict the exact top. His most recent tweet underscores this essential principle: always manage risk, lock in profits, build in layers, and avoid the trap of thinking you can and will catch the exact top. Raoul is optimistic about the trend into 2026, but his fundamental message is clear. Even he is planning to take profits before year-end. The reason? Managing risk. He stresses that this strategy isn't wavering belief, it's risk management. The market could correct sharply in the coming months, even if the longer-term outlook remains bullish. Raoul's analysis underscores an important truth for crypto investors. Patience, discipline, and macro awareness are your best allies. This cycle looks like it is longer and more complex, but it offers massive upside if navigated wisely. Stay alert to liquidity shifts, follow your risk profile, and don't be afraid to lock in profits along the way. If this resonates, subscribe for daily insights, stay disciplined, and let's all make the most of this cycle together. Thanks for watching, and I'll see you in the next video.